Mag 7 earnings, I show you where the edges are, and silver is flying. I've quantified it all on today's REKTelligence Report. As a friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everyone, welcome. I'm Dave Bush. This is the Thursday Edge Report, where I quantify specific opportunities or things to avoid in stocks, ETFs, crypto, and commodities. Let's get right into the episode. Let's start with the stock market. And of course, it is still earnings season. Now, I have posted several notes about various companies about to report. One of them recently was Intel, INTC, and warning that the historical tendency or the probability is negative performance price-wise after earnings. Now, not every time, but probabilistically negative. And indeed, this earnings season, we see Intel has traded down. In fact, it's traded down 20% in just 3 sessions. So let's take a look. Is this a great opportunity from here on out, or is this something to avoid? That's the question that I'm posing and about to answer. So let's look at holding Intel for 30 days if it trades down 20% or more within 3 sessions. So those are the conditions. And then the exit will be hold for 30 days or exit 30 bars later. Now you can see historically from late 1972 to the present, the total P&L hypothetical return here for Intel is a whopping positive 3.19%. That's it for all 8 instances in which this has happened. By the way, those are 8 instances in which it's met those conditions. Not always earnings related, some of them surely, and the recent one, of course. But is this a great opportunity? This answers it very clearly for me, which is no. I mean, basically, there's no edge here. Not a lot of data, but still 8 instances. It's enough to draw a conclusion for me that says stay away. Profit factor is below 1 as well. Even though the total P&L is positive, that is due to path dependency, the order in which the trades came. Let's move on to a longer hold. What if we hold for 60 days? And profit factor is even worse here, 0.671. Remember, a profit factor of 1.0 or 1 means that the sum of gross gains divided by the sum of gross losses is 1. It's equal gains and losses. Break even, in other words. This is below 1. That means that it loses more than it gains. And you can see the total P&L also this time negative quite clearly over these 6 instances now with a 60-day hold, negative 43.22% over those 6 instances. So no improvement over 60 days, in fact, a little bit worse. What about a 3-month or 90-day hold? And this is still negative 15.17 total return over those 6 instances since the early 70s. Profit factor, again, still well below 1. This is a stay away from Intel for me, at least over the short to intermediate term, right? The 30, 60, 90 days. I don't want to have anything to do with it. So this report drops January 29th, Thursday. After the closing bell today, Apple reports. Obviously, it hasn't reported yet, but I wanted to look at a scenario in which Apple either gains or loses 10% in a single session. What follows 90 days later? Let's take a look. So we're going to start with what we see right on screen already, which is down 10% in a single session. Buy it and hold it for 90 days. Historically, what does that look like? Well, there have been 20 instances of this, not necessarily earnings related, but just condition related. And the total P&L is negative 13.09. Is it deeply negative? No. But there is no edge here. If you look on the far right side, profit factor 0.924. That is below 1. What about if Apple gains 10% in a single session and we were hypothetically buying it and holding it for 90 days? Well, here it is. And we see incredible momentum. In fact, there are 25 instances. And the total P&L is an astounding 2,000%. Over 2,000% on these 25 instances. The hit rate or profitability is 68% of the time, 17 out of 25 were profitable 90 days later. And the profit factor metric is awesome. Now we have a couple companies which just reported, Microsoft and Meta. Let's look at Microsoft. And on a daily chart, down 10% or more in a single day, what does that look like 90 days later? Here, if it's down 10% with Microsoft in that single session, there have been 8 instances since spring of 1986 through the present, and there is a definite positive edge here. You see total P&L 156.5%. So buy on weakness with Microsoft, at least historically, has overall been net positive. If we look at profitability, we see 6 of 8 were profitable 90 days later under this very negative scenario. And the profit factor is a really awesome 7.038 profit factor. Now, it's a lot easier to have a high profit factor on a low number of trades or instances, but nevertheless, it's still an excellent profit factor despite only having 8 data points. What about Microsoft up 10% or more in a single session, hold it for 90 days, we see basically flat. The total P&L, 7.33% positive, I mean, just above break even. And 11 instances of this, only 45.45% have been positive 90 days later. And the profit factor, yeah, technically it's above 1, but not much. It looks like noise here. So not a big edge. Very unlike Apple, despite being tech and a lot of software, you can see that it's a very different picture in terms of the momentum factor. All right, let's turn to Meta. Of course, this is formerly Facebook, and it will have reported by the time you are watching this. I'm recording it before it reports, so I don't know how Meta has performed, but I do want to look at what if it's performed extremely well or very negatively in one session. So again, down 10% or more in a single day. Historically, Meta from spring 2012 to the present only has a slight positive total return for this scenario, positive 13.7%. 6 instances, not a lot. Obviously, not a ton of history for the stock. Profitability is a coin flip, 50-50. And profit factor is positive 1.17, so better than 1, of course, but not any kind of big edge here. However, let's look at Meta historically up 10% in a single session. Hypothetically, buy it, hold it for 90 days, and exit. What does it look like? Well, very strongly positive here, 607 and change percent total return. And not much drawdown, not something we're focusing on in these queries, but 11 instances of this. Profitability, 10 out of 11, that is over 90%, and 10.56 profit factor, 10 times the winnings versus the losses. And again, not a ton of data, 11 instances, but very impressive. Let's turn to crypto now. And I recently showcased a Bitcoin signal in one of the edges I've created, which is the Keltner breakout edge. It triggered a buy signal that then failed. You can see several consecutive sessions, in fact, where it dropped. We see a big plunge and it closed below the middle of the channel. That is part of the exit criteria, and this stopped out. So this was roughly a model loss of around 9%, a little bit under that, I believe. In terms of the whole history of the edge, you can see this is 2011 to the present and includes all of the in-sample development trades. It includes out-of-sample and so forth. And this has a understandably huge total P&L, 62 instances now. And max drawdown is just 24.41%, pretty tame for a model that has performed like this has. Profitability here is almost 63%, 62.9 to be exact. 39 out of 62 have been profitable. And the profit factor for this many instances, over 60 or 62 to be exact, 2.734 is really excellent. So the last several have been down. We've seen this kind of behavior before, right? We saw it here. Looks like 3 or 4 consecutive losses. We're seeing looks like 4 at this point. And this is part of trend following, where you have to be willing to sit through these failed breakouts and continue to cast the lure. So wanted to update you on that since I mentioned that signal when it broke out. Stop out here. I'll bring you the next one. Now, in terms of other crypto opportunity, great edges, things to show you for this week, I really didn't find anything despite putting a lot of time into that. So don't have anything further in the crypto space to share with you today specific to a coin or token. But of course, on the All Markets Report on Monday, I will cover the crypto space again, more from a high level. Now I'm going to turn to the commodity space, and no surprise, once again, I'm going to look at a precious metal, this time silver futures, which as I record this, which is Wednesday before the report comes out, silver is trading over 30% above its 20-day moving average. You can see that right on this chart. The blue line is the 20 SMA, and the bottom pane shows the stretch percent indicator, and you can see it is over that 30 mark. So obviously, this is already a very well-established momentum trade. This is not news to anyone. But at this technical position that it's in right now, what should I expect going forward over various timeframes? That's my question. Is this a harbinger of a lot more momentum? Is it something else? Let's find out. So here is silver futures. Again, same condition, stretch percent on the daily, 30% or more. And historically, from 1970 to the present, there have been just 3 instances of this, and a total P&L with a 30-day exit, that's what we're looking at here, hold for 30 days once this condition is met. The P&L is just marginally positive, 13.49%. Again, just 3 trades. Profitability, though, is 2 out of 3 are positive, and the profit factor is really good, 2.489. So let's take a look at what this looks like, because profit factor looks great, total P&L doesn't. Let's look at the trades here, at least briefly. So you can see in the net P&L, with a trade ending October 30th, 1979, you can see that was 8.32% was the hypothetical gain there. You can see for the second trade here that was closed, you see closed out in February 1980, and that was positive 17.87%. So again, this is all following the 30% stretch level and then holding it for 30 more days. And you can see in both of those instances, there is a little bit more upside. Then you go to the hypothetical trade closed out in June of 1980, and we see a negative result, negative 7.93%. And we can see this is the current open trade, if you will, which is just under break even, negative 2.4. So that remains to be determined. That hasn't had 30 days yet. So you can see 2 out of 3 of these were positive, 1 negative. Total return, it's pretty marginal, even though the profit factor was a very good number. Let's look at a different window of time. We've got 90 days now, and we can see a very different looking picture. After that 30% stretch or greater condition is met, hold for 90 days, total P&L 173.79%. Only 2 closed instances. That's it for all of this time. So we are in rare territory. Make no mistake right now with silver futures. Profitable 100%. You can't even calculate profit factor because you'd have to divide by 0. It doesn't work. Let's look at the trades. We can see closed out right at the peak, basically January 1980, 138.7% gain with this condition in that hold time. And we can see a second instance plus 20.96%. And then this negative number, that's the open instance right now. So we don't count that. So interesting to see that prior to the January 1980 peak in silver futures, all the way back at that time, we did get a signal like this, and 90 days later was around the peak. So that does not necessarily mean we're going to see the same kind of behavior this time around, but I'm logging it away as a mental note. Let's take a look at a 180-day exit, and you can see just 2 instances. Total P&L is negative, and 1 was positive, 1 was negative. So there you go. Profit factor is in the basement, well below 1. Let's look at those trades, and you can see 1 closed out after 180 days following this condition that we keep talking about. 1 was positive 9%, the other was down 28.1%, and you can see right there the open trade that we don't count that. So that 90-day, at least historically, was the sweet spot, and yet we don't have a ton of data here. Thanks for watching, everyone. Really appreciate it. And feel free to share this around. Obviously, I'd love as many viewers as possible. And if you find this valuable, let me know. You can always reach me at david@tradingfromparadise.com. Love to hear from you. And for now, cheers from the Caribbean. I will see you in the All Markets Report on Monday.